Greetings, guys. It's a pleasure having you here. And of course, I remain Tolu of CSAFOREX, Common Sense Approach to Forex Trading. Today, we're going to be talking about a particular chart on drugs. Yes, you heard me right. A particular currency pair on drugs. Of course, looking at the screen, you already know what I'm talking about. We're talking about the dollar yen. The dollar yen. Please also note as a disclaimer that this is for educational purposes and not for signals, right? We want to show you and teach you how to trade so that you can be in the steering wheel yourself. Now, why did we say on drugs? Now, ever since we had this, if you look at what we had here, ever since we had this wedge over here, this is the monthly time frame, by the way. Ever since we had this wedge over here, the the druggy part was as it broke out from here, it just took off, right? Now, you should never fight a vertical move, right? Never ever fight a vertical move. And this simply shows you that the strength of the USD is super duper high, while the weakness of the yen, of the JPY, is super duper low. It's weak, right? Normally, you should be pairing a strong currency with a weak one. And these two are at extremes, if you ask me, right? From what we have over here, we had this area that dated back to about 2001 here. And you can see the market got there here. It was about 135, 136 area of supposed resistance. But you can see we had a little reaction here. And then before you know it, it blasted out. And blasted out, where does it look like we're heading to? It looks like we're heading to this area here. You can see dating back to about 1997 period. This is where it seems to be heading to at about 147. 147 on drugs. So it has moved about 99, or let's just say 100 from the marker of 100. Let's use the cross here, from the marker of about 102.50 here. And now it has done over about 3,000, 4,000 pips to the upside. And of course, still pushing higher. I might as well do 4,000. And this is coming from last year, the beginning of last year. That is January 2021 till now. This is totally crazy. Now, this is from the monthly time frame. I want to show you what is happening because, of course, as we said earlier, it's on drugs, and this is a one-directional train, right, based on the directional bias. But looking at the weekly time frame that we have over here, we see that it has just broken out of this 139.50 area of former resistance. Now should act as support and then push higher. But I'm going to be showing you this also based on the two participants, that's the buyers and the sellers. So meaning that naturally, as the trend is up, we should be looking forward to buying. But I want to show you something, because smart money, they also like it when people are going in one direction so that they can go heavily in the opposite direction and then take them out, even if it's just momentarily. So for this weekly time frame, you can see what's happening. This is a very clean chart. Here was never tested as support, right? It never came back here as support. Here it came back as support and then pushed higher based on this. And then we're waiting for this to occur. But then I want to show you even what the sellers are looking at. Here from the daily time frame, you can now see what the sellers, or rather how the sellers are looking at the market. That is the dollar yen. You can see from this 139.50 area we talked about, it broke out nicely. But then we had a wedge, we had a rising wedge here before. When we had this rising wedge, right, it dropped back to this area here, or flip zone, where we had resistance, support, and then it acted as support and then pushed higher. Now we have another rising wedge, as we can see over here. For this rising wedge, the sellers have looked at this as another opportunity, because obviously you have it as overbought. You have the divergence, whether you're using the RSI or MACD or any of the oscillators, you should definitely see divergence over here in this section where the price is now. But one thing I want to tell you that, of course, going against the market is dangerous. And as it is dangerous, you need deeper pockets, because if you had entered maybe somewhere around here, maybe based on this small reaction here, right? And of course, you are trying to fade your positions, you probably would have put in a second entry around here. Then you might have a penny order strategically above around here. You are doing this, why? Because at the end of the day, no matter how price moves in a bullish run, in a bullish trend, it has to retrace. That is given, whether you like it or not. And the same applies when it's in a bearish trend. It has to retrace. So traders that go against the market, the counter trend traders, they use this to their advantage, and then they tend to do the fade. But fading as a form of martingale, you need to ensure that you have deep pockets to withstand the drawdowns. This type of trading is not for everybody. Now, the concept now is that even if it pushes higher, eventually when it starts to drop, right, all of these positions, the first one, the second one, and the third one would all now be in profit, but then they have gone through heavy drawdowns and all. And this is what traders are trying to do, and they're crashing accounts because they don't have deep pockets. They don't know how to fade, maybe based on the number of pips to fade and so on. So I will not recommend this. I'm just trying to explain to you what the other party, that is the sellers in this case, are thinking of and want to do. And then by the time we drop down to the 4 hours time frame, then it starts to get clearer. You can see this rising channel that we have here. The rising channel we have here, and this level yet to be tested as support, as we can see, is yet to be tested as support. This is the same 139.50 area that we talked about earlier from the monthly, weekly, daily, and now you can see it also on the 4 hours time frame. From here, if you are looking at entering the market here, you just need to wait for a reaction here. Maybe based on the candlestick formations, you could have like the popular bearish pin bar, bearish hammer, or maybe an engulfing over here, bearish, and then you use that as your trigger to then do what? To then go down. The advantage of you dropping in time frames majorly is for you to have a smaller amount of stop loss for that same take profit where you did your analysis from, based on the higher time frames, monthly, weekly, daily, and so on. So it will give you a solid reward. It will give you a solid risk to reward ratio. And this is very, very important for any trader. You must always ensure that your risk to reward ratio is good to go before you pull the trigger on any trade. Now, as I'm saying this, I want you to pay attention to this area on the 4 hours time frame. I'm going to drop to the hourly time frame as well before I call it a day, but I want you to pay attention to these areas here and how the market reacts, because trust me, it is clearly leaving some other areas of interest, as we can see over here, based on this higher lows that we have. Based on the higher lows I have just marked out here, it is leaving some areas of interest that the price should retrace to. Whether you like it or not, I will beat my chest and tell you that price needs to retrace at every given run. That is the market for you. It is retracing for a lot of reasons. It is retracing to start up a fresh run, for those traders to put in a fresh orders to continue in that same trend and so on, right? Or it could even be as a form of a full reversal, who knows, right? Because trust me, as we started from the monthly time frame, this USDJPY has been on drugs since last year, not just this year. And then finally, on the hourly time frame, you can see what we have here. The trend has been extremely to the upside. And then what we're looking out for over here is what we're looking out for the market to slow down in its pace, at least retest 140 or retest 139.50 area, and you can see what we have here. So for me, you could either want to go with the trend here and wait for the market to come out to this untested, and then you look for buy positions to take it up, or wait for price to get to this untested and wait for price to push it up. But then you could also be looking forward to going against the market. It still boils down to the type of trader that you are. You must have your trading plan, and in your trading plan, it must be clearly stated the type of trader that you are, whether you are a trend trader or whether you are a counter trend trader. I wouldn't advise that you move from trend to counter trend and so on, especially if you cannot stomach losses, right? So depending on the type of trader that you are, you should know what you want to do at any point in time. One thing I also like doing when I look at a chart like this, I like to find out, okay, great, what about the Fibonacci traders? Because a lot of traders are using Fibonacci, and Fibonacci is a powerful tool for retracement, meaning that the price must retrace, as I said earlier. So if I'm going to draw the Fibonacci tool from these lows here to these highs here, let me just put L for lows to these highs over here, as we have. This is what I'm going to do. I'm going to click here from the lows here and then drag the Fibonacci tool all the way to the highs here. That means that you would like the price to pull back to this area here of 38.2, 50 or 61.8 in order for it to push higher. And you can see that these areas that are mapped out, they are corresponding with areas of interest. You can see this here is an area of interest already mapped out. 50, also these lows here, these lower highs here, and of course these highs here yet to be tested as well. So if you look at it very well, you need to be able to analyze the market from different perspectives, also taking into consideration what both parties want to do, what they're looking at. It's just like playing chess. I don't know whether you play chess or you play draft or whatever game you play. You must always pay attention to what the other party wants to do. Now I'm going to call it a day here. I want you to study this chart. I want you to pay attention because I have cited two scenarios for you from the buyer's perspective with the trend and from the seller's perspective against the trend, whether you are fading or you are looking for your conservative entry against the market. Because of course you can clearly state and see that you have divergence here and this is overbought and so on. So I'm going to call it today, and I want to say thank you guys for joining me again. We'll do more and more videos like this. If this video was helpful, you know what to do. Give it a thumbs up. If you're new to the channel, hit the subscribe button and turn on the notification bell that once this video is dropped fresh, you'll get it and then you can take advantage. Thank you guys. Enjoy the rest of the day. Later today, we have the ISM services PMI for the dollar USD by 3 p.m. UK time. So that might influence the movement for this dollar yen. Let's see how it plays out. Thank you guys. Enjoy the rest of the day and goodbye for now. Cheers.